All right, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. Sorry, I was just reading this Global Times tweet. As the heat picks up a little bit regarding China, I think we have to be a little aware of what's happening in currencies. Hold on, let me turn down my speakers here for a second. Okay. It's been a very active day. Hopefully you guys have had a good day. I know I've had my best day of the month actually today, which is good. Let's just make sure. I'm trying to make sure I don't piss it all away. You know how things go. It's like you have a good day, you get a little cocky, and then next thing you know, your day is not so good. Um, Tell me you've never done that before, right? Am I the only one that's ever done that before? Come on now. Let's see. Let's see. Jason said, "Hey Blake, this morning you spoke about the Aussie dollar updates and how it dropped 30 pips. Is there some type of alert when you guys make updates to the charts?" Yeah, actually, if you go into where it says settings, okay. Now, this is something. Whoops. Hey, you guys see all that? all that stuff? That's me, right? But if you go over to notifications, this is where you can default everything. So, or you can adjust everything. So you can say, I want to get an update for notifications, key levels, when there's browser notifications, and then the pairs. So you can drag this, pair, like I'm under default for everything, but let's say I want the Euro custom. Okay, I want to get patterns in play, bull, bear, breach, support and resistance, any update, I want it via email, just for the Euro, you know what I mean? So like you may have yours adjusted where you're Aussie, you didn't get an update via email, and you're like, oh, well, you notice how I have some of my emails not checked because I'm the one that does them, or not all of them, but I don't need to get all of the updates, and if my email box would get completely swarmed. Um, but that's how you can make those adjustments, and also when you're on your mobile, which I can't show you right here, you can say, okay, well, when I'm on my mobile phone, I only trade the Euro, Aussie, and the pound yen, or whatever it is, and then you can adjust those settings appropriately for your mobile device only. So that's kind of cool. But yeah, whenever I push out an update, let's see here. Let me get rid of the data flash. Update history. And let's say I did a, not key level, basic technical analysis. The Aussie dollar 6 hours ago. This is the one you're talking about, right? That basic technical analysis went out 6 hours ago. 6 hours ago, you're going to get the notifications that you selected based on your settings. So just go through either your mobile device or your desktop right here and adjust those settings. So I hope that helps. And you're welcome, Jason. Dom says that's called afternoon. I don't know what we were talking about, but that's all right. So let's talk about the market. First of all, the euro dollar. You're probably wondering, well, why isn't the euro, why isn't it holding the breakout, or is it even a breakout? Look, I'm in the camp that I'm buying euro on crosses selectively, and I have some euro dollar exposure. I'm not very aggressive because it wasn't the news that I was really looking for. It's a good step, and it's the right step for um, it's it, uh, it's the right step that Europe needs to make, right? So I think that the euro is going to do better on the crosses, and maybe even as a pair, but I'm not super aggressive yet. I'd like to see us get a daily close above the 200-day moving average, which based on what we're seeing right now is not going to happen. You still have some chatter about some different countries. They want some more talks, and they want but the fact of the matter is Europe is making strides into becoming more of a quote unquote fiscal union, which is good. And I think that's good because that's going to help. By the way, if you look at like here's the S&P, and let me get rid of this really quick. I think that was from earlier this morning. Let me compare that to, let's just say, the German DAX. I'll just use the DAX for a let's do CFD, might be easier. Yeah, let's do that. Okay. If you notice the DAX versus the S&P longer term, the DAX has underperformed. S&P's hit new highs, DAX didn't, but you can see the DAX is actually performing well today and outperforming the S&P. I expect that to continue. So as Europe continues to make strides, that's going to be good. Now, you may say, well, I don't necessarily want to buy the stock market right now because of the big bounce that it's had. But what you could do is you could play like what's the word I'm looking for right off the top of my head? You could play, you could do long DAX, long S&P, type of trade. And yeah, pairs trade, Gavin said. Yeah, thank you. It's late in the day. I got up really early this morning, a little earlier than normal. I didn't sleep too well last night. It's getting hot here, so my sleeping kind of suffers when it starts to get warm. Anyway, that's why I feel a little scatterbrained at the moment. But you can do a pairs type of trade where you could be long the DAX, short the S&P, right? So if they both go down, you're making money on the S&P, you're losing money on the DAX, but you're losing less money on the DAX. And then if the markets go up, you lose money in the S&P, but you make more money on your DAX long. That's how you trade that pairs trade. I'm sorry, it's long DAX, short S&P, right? If you have obviously the capital to do so, because it's going to tie up capital doing that. But the bottom line is I do think that the DAX is going to outpace the S&P. So, or, US indices, and one of them in particular that might be the case would be the NASDAQ. I think the NASDAQ is going to suffer as you see some continued rotation. And, as the NASDAQ pulls back, the DAX may pull back, but not as much, or, something like that. So anyway, that's just something that I wanted to mention. Let me get rid of the DAX here. Let's talk about a few other things. That Mexican peso worked out really well today. As I mentioned to you guys earlier, the quadruple confluence of, the big support, 50% retracement, 127% extension. Personally, I think that the US dollar Mexican peso is a pair that makes it back towards, 2270, maybe 2285, and then it's gonna, it's gonna fail up here, at least, do one of these, right? And then whether it hits new lows or doesn't will be more dependent on what's happening with equities and whatnot. But I think that the US dollar Mexican peso is making some good gains. And I've actually already pulled mine off, and I'm trying to bid for some down here. And if you look at the intraday chart, your intraday 38% retracement comes in at, oops, that's not what I wanted to do. Let me delete that. The 50% retracement comes in at 31, and the 38% retracement comes in at 35. So 22.35 and 22.31. I think this is the buy zone for the US dollar Mexican peso for the next leg higher. Right, something that looks like this, as we push up towards, trend highs, and then we'll reverse somewhere up here, I'm assuming in the next day or two. But that's how I'm playing the US dollar Mexican peso right now. The euro, we talked about the euro. The cable's really underperforming, but it's bouncing back a little bit. By the way, I played the euro pound, and I did not. So other people were selling it up here, and good on them. A lot of other traders were selling it up here. I sold mine at the 618 basically. Some of it right at it, some of it, the rest of it right above it. I did not expect it to make all the move all the way up here. But now that we're making a lower low, I think what's going to happen, if, you know, obviously I could be mistaken about this, but this is what I'm thinking, is we're going to be making some sort of consolidation that looks like this, right? Something like that. You know, roughly. So I'm trying to buy a dip now in the euro pound, euro sterling. But I might actually, right now, I think my order is at 50. Let me look at it. It's at 51. So I'm actually probably going to drop it back down, you know, probably a little bit lower, maybe down towards 89.30 or something like that a little bit later today. But that's what I'm looking to do with that. I'm also, you gotta watch the Euro Aussie. This, I just bought it just moments ago off of this trendline support. This is broken trendline. But what's pretty crazy about the Euro Aussie is this might be a key reversal day here. We're back above the 200-day moving average, false breakdown, outside day. Is it a bullish engulfing? I mean, no, but it'll be an outside day. And you know, if we close closer to 167, it'll definitely be a key reversal day. And so we're breaking above this trend line. So what I want to see by the end of the day is I want to see us probably closer to like 67 cents or 167 rather, and a move, you know, above those highs. It's going to really start to squeeze. The Aussie failed, you know, at a pretty important area today. The Aussie dollar, you know, failed at that big resistance here, and you can see we were pushing this this breakout point. But the failure above that 66.50, close to 67 cents, is a big deal. And even though I'm not super comfortable about buying dollars, the way I'm expressing my Aussie bearishness is buying the Euro Aussie, right? Euro New Zealand's a very similar situation, but I think the Euro New Zealand is not going to perform as well as the Euro Aussie. But the flip side of that is the Euro New Zealand didn't make a new low. Like, we didn't make a new trend low. So I think the Euro New Zealand, let's say the Euro Aussie gets back to, let's say 170, the Euro New Zealand might get back to 179. You know, I think they'll both move together. I just think the Euro Aussie will be a little bit better of a trade to the long side due to the Aussie's underperformance, which you can actually see in the Aussie New Zealand, which is performing like poop on a stick. You know, poop on a stick. You're familiar with poop on a stick, right? So it's the same thing that if you ever go to a fair where they have deep fried stuff, and you get a deep fried candy bar. You ever had one of those? You've never been to a Texas State Fair then. This is poop on the stick right there. But anyway, if you break through the Aussie New Zealand through the 618 retracement, I think that's gonna, you know, it's gonna just really showcase the weakness of the Aussie. One of the reasons why the Aussie could potentially underperform is this news out of Hong Kong. And that's the last thing I really want to talk about, and then I'm gonna let you guys go. Secretary of State Mike Pompeo, he made this announcement about, you know, Hong Kong and losing its, you know, its status. I'll tell you what, that sell-off happened right here, and then when that news came out, we rallied. That just shows you, in my opinion, the corruption of insider information that we get in this administration. And I'm saying that because it is plain as day. That we sold off here, the Bloomberg headlines hit, and we rallied. And it's like a few minutes before it hit, everybody knew it was coming, because I was like, oh my God, where's the news? What's the news? We were all looking around, and the guys in my office were like, what the, we have every news service, right? And we didn't get the news until once it came out, the market rallied. So just shows you how much insider information in this administration gets passed around, which, you know, take it for what it's worth, you know, whatever. But somebody knew something before I did, and I've got the fastest news on the planet. So I don't know. Anyway, all right. Venkat said, "Hey Blake, can we go along the S&P? It's going up again." I mean, you can. I think you know, your risk reward in the S&P, you have to just, you know, manage it. It's like, okay, if you're going to go along the S&P right here, put your stops there, target somewhere up here. You know, don't just, you know, whatever you do, just, you know, realize that we're really close to the 200-day moving average, and it seems really sticky up here. I'd rather be on the short side, frankly. I'd rather find areas to be on the short side than be on the long side. That's just my take at these levels based on where we're at. Dominic said, check the 48 EMA on the weekly on the Euro Aussie. I will look. Euro Aussie weekly 48 EMA. Oh, look at that. Right there. There's a 50 SMA, the orange one. But yeah, I mean, we're basically holding it. Hold. Yeah, I mean, you know, look, we've rallied sharply, came off. You know, I think the Euro Aussie is set up to bounce. You know, soon, whether it's today or next week, it's, you know, or tomorrow. I think it's set to bounce pretty good. All right. Anyway, guys, Venkat says, any reason why you have 48 EMA and not 50 EMA? Well, first of all, I have a 50 SMA, 200 SMA, and 48 EMA. And the 48 EMA is because one of our traders who'd been with our community for 8-9 years prior to his passing, his name was Captain Ron, and Ron was a very good friend of many of us in the chat room, and he swore up and down by the 48 EMA. But usually he'd look on like a 1 hour or a 4 hour chart, right? And he followed it, you know, the EMAs, the 48 EMA, like a lot, really well. Anyway, to make a long story short, that's his legacy, and a lot of us keep the EMA, the 48 EMA on our charts because it's very effective. And if you ever want to learn more about that, go to YouTube and let's see if I can, give me a second. Hold on. Give me 1 second. YouTube. On Ziggy, shoot, that's not it. I don't think. I'll have to look for it. One of these days I'll find the video for you. Be in the chat room and I'm sure actually somebody will probably find it. But anyway, it's he did an interview with Dale, and it was good. So, all right, guys, I'm gonna let you go. If you can't tell, I am tired. So have a great one. I actually have to go to the store, and I got to go pick up some stuff so the kids have something to eat. All right, have a good one. Take care, guys.